Aloha, ladies and gentlemen. It is Sunday, April 14th, 2023, 4:21 p.m. Hawaiian Standard Time. That means I made it back to Hawaii from Florida. I was traveling on Friday, the 14th, and I left the hotel at 4:30 a.m. Eastern Standard Time on the 14th, and I got basically about 23 hours of travel. I was back here in Hawaii. During that time, I had some cash secured put options in this paper trading account that were expiring. Let's take a look at that. But at the 1 minute mark, I'm going to put a video right here. Get ready. Here it comes. Boom. There it is. The unfair advantages of selling cash secured put options. When this video is done, you can go back to the 1 minute mark. That's easy to remember. Watch that video why selling cash secured put options on stocks you don't mind owning gives you unfair advantages. And you'll get a better understanding of why I could be traveling on a day that I had several put options expiring and not even care about it. Take a look at that. We got free stuff. We got paid stuff. We specifically is me, myself, and I. You can see the link to the YouTube. We got the mission over here. And if you want to contact me, myself, and I, you can use that. Let's dive into it. See that? See how that's moving? That means everything's. That means there's nothing there anymore, right? Unlike over here, there's something there, right? So this is where those options were, and basically I had sold put options on XLF and XLI. XLI strike price was down here at $94. XLF the strike price was at $30. I was trying to get filled on I think 31 and 31.50, but I didn't get filled on those. If you want to see those videos, I will link to them. Right up in here. Maybe around the 2:30 and the maybe 2:40ish time period of this video. So there'll be three different links in here. One is at the 1 minute mark. A second one is at 2 minutes and 30 seconds. And a third one, let me write that down, 2 minutes and 30 seconds. And a third video at the 2 minutes and 40 seconds. So the 2 minutes and 30 seconds will be selling more put options, and then the 2 minutes and 40 seconds will be the not getting filled on those. So that's what happened in the past. What about going forward into the future? Well, here we are. We were selling the put options over here at the 31 strike price on XLF. And it basically had gone the opposite direction of our strike price. That's why I was looking at selling more options closer to where the money is, being the price that the stock is trading at. So we'll continue to look at XLF. I'm not going to link to this video, but there was another video, something about XLI versus XLF, and I just kind of showed you the difference in liquidity. XLF is way more liquid than XLI. So we're gonna sell more on XLF, and by the way, we have 12 different ETF sectors here, and with a variety of price ranges. For example, you got 148 here, you all the way down to 32 bucks and some change there. Looks like that's the lowest one at the moment. When you're selling options, you're dealing in increments of 100 shares of the stock. So for example, if we're going to sell a put option on XLF at the $30 strike price, if it's a cash secured put option, we have to have a minimum of $3,000 in our account because we are taking a legal obligation to buy 100 shares of XLF at 300 bucks. Right? If we do another contract, then if it's also at the $30 strike price, then that would be $600. If you want to know more details on those, check out this free stuff. Go through this YouTube playlist under the free stuff, and it'll give you more of the details the mechanics of it, as well as show you how to set up some easy stock charts for yourself. But let's take a little deeper look at XLF, financial ETF. So we're looking at XLF, 6 months from left to right, each of these candles representing 1 day. There's an average volume down here. We see volume really spiked up down here during the sell-off, and then kind of tapered off, and we're hitting back to a little bit higher volume. This candle right here indicates that it might be running out of steam, right? It did gap up, but it's in this doji-ish kind of thing. This candle where it opens and closes in almost the exact same spot, sometimes it can be at the end of a movement in a certain direction. Sometimes it can be just a pause before it continues to move. But here it's showing you a bit of a slowdown in movement at that time. And let's count these. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 7 from here. The reason why I counted those is that sometimes around the 10th candle, a 7 is getting kind of close to the 10th candle though, but this is definitely not science in this part, and but something about the when you get around that 10th candle, don't be surprised if you have a reversal or a slowdown or something like that. Some change in the momentum of that direction. Now we're 7, so we'll see. Something else that's pretty telling here is we're at the $32 mark. Let's look to the left. We see prices kind of came down here, got close to the 32, and went back up. And over here, we see the same doji-ish candle, but that's more of a, you can see the body is on the lower side. All right, prices traded all the way up here and pulled back. Although it still continued to go up, look at prices did it around here again. Go back a year at the 32. Prices kind of opened up below there. See that? Look at this. Not a surprise, right? See this? Not a surprise. So 32 is probably is a place of support and resistance depending on which side the price action's on. On the bottom side, probably going to act as a little bit of resistance. On the top side, probably going to act as a little bit of support. And now also here at the 32, you see looks like some resistance here. Seems to be wiggling around in this area. Look to the left. Did we see prices kind of do that before? Yeah, kind of getting clumpy around here. Sort of see it in there, happening here. And a lot of times what's happening is it's not a specific like, oh, it's the 32 or it's the 31. Oh, this is 32.50 up here, isn't it? Or what is that? That's 33. Sorry about that. Okay, 33 up here. And so if I was saying 31, whatever I was saying, I apologize. But go with what the information the chart's telling you, not the mistakes that are coming out of my out of my mouth. Anyways, sometimes it's more of a range, right? It's not an exact number. It's kind of a range, right? So if you hear people kind of bickering about different prices of support and resistance, look to see if they're sort of in the same range. So what I'm getting out of this, and let's look at the weekly chart. What I'm getting wondering is if we should sell a 32. If that would be fun to do. Definitely probably a 31 would probably expire worthless. Not sure about a 32. We could do a little bit of a ladder. We could do 30, 31, and maybe 32. Would I do this exactly like this with real money? Probably not. I'm being a little more liberal here because of for training kind of example purposes. So you want to tighten everything up quite a bit more than that. But let's look at that. Let's look at let's see. 12 days. Now normally maybe I would sell a little longer, but just to have fun for making these videos and cycle through the stuff faster, maybe even look at the 5 days. 5 days left to expiration. Now 30, not really getting much. Looks like the highest it sold for or traded hands for was 3 cents. Lowest was a penny. 31, 2 and 4, 32, 7 and 9. Now let's say you're like, hey, I'm not excited about that, but you could go out to 30 days. 30 days, you're getting 13 and 15. Remember, that's times 100, so $15 somewhere in there. 26 was the most you can make out of that. Now remember what you would be making this for. Let's say if we sold this, and actually, just for fun, let's do that. Let's try something here. But remember what this is. We're selling, basically, we are instead of selling car insurance, we're selling stock insurance. So if we get paid $25 to wait to buy an asset that we want to buy, that's pretty cool, huh? And if we buy our asset, we still, if we don't buy the asset, we still keep the $26 or whatever we get filled for, 25. If we do buy the asset, we still keep the premium and we get 100 shares of this asset we wanted to own. This is kind of going into the unfair advantage of selling cash secured put options on stocks you want to own. Remember that link to that video is at the 1 minute mark. So just for fun, going to something else I want to show you too, the delta here, which delta, there's a little more to delta than what I'm going to show you, but we're going to use this as a quick and dirty way to calculate probability, right? So the delta is telling us that there's roughly about 11% chance that at the end of 33 days, the XLF will be at less than $30. So what I'm going to do, we got a lot of volume in here, and what I'm going to do, so I'm going to see if we can get filled for, I'll go for, let's try for 26. What the heck, right? So click that. I'm just going to quickly move this over to 26. Change this to good till cancel. Not because I'm necessarily going to leave it for a while, but Monday I'm going to go to work before the stock market closes, and then when I get back from work, if I have this as a day order, it's just going to disappear. I'd rather have it as a good till cancel, so I can look at it in relationship to the current market and show you, my fine friends, what did or didn't happen there. Click this, send and confirm. This is going to tell us a variety of information, telling us what we're doing, break evens, da-da-da-da. If this goes through, there'll be a little 65-cent deduction for commissions, and this will be our profit before tax. Notice right here it says max loss, almost $3,000. Why is that? Because this is assuming that this ETF goes to zero, which is kind of hard for an ETF to go to zero, but I guess it could happen. I'm going to move this under long stock. The reason why I'm moving it under long stock is that I don't want it in the like uncategorized, that it's not a futures trade. Even though it is an options trade, it's not like an iron condor or some sort of credit spread or anything like that eventually expires worthless, and I don't have ability to take or at expiration date, I have no ability to take ownership of stock, or not too easily. Not shorting stock. I could put it under open orders. Actually, that's where I'm going to put it. I forgot. Under open orders. And if it gets filled, then I'm going to change it to long stock. Now again, to better understand the differences of most option trades in selling cash secured put options on stocks that you don't mind owning, go back to the 1 minute mark of this video and watch that unfair advantage of selling cash secured put options on stocks you don't mind owning. Boom. Okay, so we got that in there, right? And we have definitely a little less than $200,000 of buying power. Granted, keep in mind, this is a simulated trading. If you think paper trading is a waste of time, then I hope you are not a pilot, because that, or a police officer, or in the military, or some sort of boxer or something. Because if you think training is a waste of time, I definitely don't want you to be my doctor. I would not want to be under the knife of a doctor that thought training was a waste of time. I definitely would not want to fly in an airplane with a pilot that thought it was a waste of time. Just like give me the keys of the airplane. That's how I'm going to learn. So, if that's the way you feel that paper trading is a waste of time, then Let's find a sport that you've never played before, and I want you and I to compete for money, and I'll train and you don't, and let's see how that works for you so I can take your money. So don't be that type of person. Don't have your money taken by the stock market. Realize that it's silly to not practice and to not train when you're up against professionals. Like you don't know who you're trading against, right? You really don't know who you're trading against. When you get in the boxing ring with somebody, you see who your opponent is across the room for you. When you get in the boxing ring, if you're going up against Canelo, you know you're going to have a hard night out if you're not of that skill level, right? Well, when you're trading, you don't know who you're trading against. You don't know if you're trading against a hedge fund. You don't know if you're trading against me. I don't know if I'm trading against you. I don't know if I'm trading against a hedge fund. Like, we don't know. So, just rest assured that the Wolf of Wall Street is out to steal your lunch money. So it's okay to learn what you're doing in a fictional account before you start taking real risk. So we put that in there. Now let's do some shorter term ones just to make we got one at 33 days, and before we put some of those on, we see it's not a lot of money, right? So it's not so much about look at how much money you can make. No, it's more about the mechanics of it, selling short term just to cycle through these a bit faster, which sometimes I do that in real life. But let's see, we'll do. I want to take a quickly look at all these different moving averages. So XLF above these two moving averages, the 9 and the 20, but still below the 200, the 50, and the 100. And you see the 50 is getting ready to cross over the 200. You ever heard of the infamous death cross and the glorious golden cross? Well, right here, when the 50 crosses over the 200, that's what they would call a golden cross. And if this 50 crosses over the 200 in the downward side, then it would be the death cross. Hey, it's got probably a little bit of reliability to it if you want to. I wouldn't buy or sell the farm on it, but it's definitely a little bit of information you can take in. Right here, we're looking at a cone of probability. This is set up, I think, on like a standard deviation, something to do with 68%. They never let me in a calculus class and stuff like that, so not exactly sure how the math works out. But I know how to use this to make myself some money. So, for example, we got one contract that we're trying to get filled for the May 19th. So down here on the dates, let's go over to May 19. Boop, there it is. Look at this. I can see May 19, just 60. We're close. We're close on that standard deviation. Technically about 68 cents below. Now again, that's like a golden cross and a death cross. It doesn't guarantee us anything, but it shows us we're out of that range, at the moment statistically. Also want to take a look at our volume profile here. So this is a different way of looking at volume. We're seeing that there's a lot of transactions. The bulk of the transactions have been right through here. We see a lot of transactions right through here too. But there's what this is telling us, which probably, if we looked through here, would probably be a lot of resistance to get up through there. So looking at this volume profile, and this is set up on a daily chart for 1 year, and you'll notice over here when we go to a weekly chart at 5 years, it looks a little different, right? More time shows the majority of transactions have been down here around the $26 level, but our trades are on a shorter term, so we're going to look at this a little bit shorter term. So based on this, we wouldn't be surprised if we saw a bit of a pullback, right? We wouldn't be surprised. And then if it pulled back to about, we would probably be safe still with our $30 strike. As far as, safe, it doesn't matter because we don't mind buying the stock for $30 anyways, but probably low probability, relatively low that it's going to get assigned at that price. And so We'll switch back over here to the 6 months, 1 day. And okay, so we got one at 30 for 33 days. Let's put one at 31 bucks. And we're going to do this on the short term. 5 days to contract, 5 days to expiration. And specifically just to make this process go faster, so I can make more videos. Like we'll be able to see this process go. If you're following along, you start kind of, getting an idea of what's going on with this repetition. So, okay, the highest it traded for was 6. Look at this, almost 100,000, and last Friday almost 5,000. So very, very liquid contract. And let's see if we can get filled at 6. Actually, it's just 1 week left. And the reason why I'm bring up the 1 week left, because this is when the option starts deteriorating pretty rapidly. But let's see if we can get 6, right? We'll get 6. We'll put in for 6 on Monday, and put 1 in for 6. We got a lot of extra cash here to play with, and every contract we're selling, it's only deducting, subtracting 3,000, maybe a little over 3,000, 3,100 here. So we'll put 1 at 6. Same thing. We're going to move this over to open orders. So we got that in there. So 31. We'll do another same one, same expiration, same strike price, 31, but instead of 6. Let's just go up to 4. See if we can get that. Open orders. That is exactly what I wanted. And so we got 31. Let's try 32. You can see less contracts in aggregate being traded here. But look at this. A whole lot traded last Friday. So we'll go with highest that got filled was 20. We'll do the same thing. We'll put an order in for 20. Good till cancel. And we'll put another one in for, let's just go 10 cents. All right, so that gives us a total of 3 different strike prices, right? With we're looking at two different expiration dates. This one being the longest. These ones being about 5 days. This is about 33 days. And on these two, we're looking at the same strike price, but getting filled at different prices. So we're going to leave it. We're going to wrap it up there for now. Instead of woo, look at all that busy body in there, right? So one thing that you can do if you're using Thinkorswim, if you don't really want to see all that stuff, I think we can go to right over here. No, actually, pardon me. I think we can get it done right in here. Settings under here. General. Show orders. Let's see if that works. Boom. See, look at it. Took those off. Sometimes I like to have them on. Right there, it was just a little bit too chaotic. And yeah, let's just call it a day right there. We did one on XLF. XLI doesn't have a lot of liquidity. We'll look at some other ETF in the meantime to see if we can find another one. I'm guessing XLK, XLV probably have a lot of liquidity, but maybe from time to time we'll throw some non-liquid ones in there. You guys have a fantastic day. Remember, we got videos for you to watch at the 1 minute mark, the 2 minute and 30 second mark, the 2 minute and 40 seconds. There's all types of goodies over here at ihavesuccess.com. And you guys have a fantasmo day.